Well, we've watched the price of oil, a very hot topic for the past year. It's continued a higher climb early in the year. Now it's fallen sharply. This morning's U.S. Bank Economic 360 features Mike Denneman, Vice President and Senior Portfolio Manager with U.S. Bank. Mike, good to have you with us today.
Good morning, Brian.
Seems like since Memorial Day, the price at the pumps come down maybe as much as a quarter in some cases?
Sure. And all of that ties back to the price of oil, which, as you said, has been climbing fairly steadily for much of this year. We saw it consistently above about $105 per barrel for much of 2012, but then just over the last several weeks, as we can see on this chart here, the price has dropped very dramatically. And when looking at that, you want to look for what's the root cause.
Yeah, why is it so volatile?
Right now, as typical, oil, a commodity, will trade on expectations of both supply and demand. So we've had in the last several weeks a string of disappointing economic news out of both Europe and here in the U.S. So the expectation is that struggling economies will use less oil. On the other hand, the supply side has been growing. We're seeing new oil coming from any number of new sources recently. There's more coming out of the Dakotas, more out of Canada. So what we have is a situation where demand is falling, but supply is rising. So the combination of those two lead to the falling oil prices.
Kind of the basis of the economy, but oil is interesting because, the economy needs reasonable oil prices to grow. And yet, when it's not growing, that's when the oil prices come down.
Exactly. It's a little bit of a vicious circle. But from our perspective, this falling oil price is nothing but good news for the economy.
Retailers, for all of us as consumers.
Absolutely. As my colleague Jim Russell was explaining just last week, energy prices are a major component of inflation. So if oil's dropping, that helps to keep inflation in check. But more importantly to us as average consumers is the link between the price of oil and that of gasoline. So we've certainly been seeing the price of gas fall recently. Not as dramatic as the oil decline, but that'll come in time. Important to note that right now, the wholesale price of gasoline is below where it was at the beginning of the year.
That is good news.
So, this, from an economic standpoint, is very helpful. You go to the pump, you fill your tank, you end up with less or more money in your pocket because it costs less to fill up. That's money you can spend elsewhere, which helps the economy as a whole.
All right, we all want to believe that this trend, downward trend, is going to continue. What do you think?
Well, because there's such a tight link between the global economy and the price of oil, until we get some significant improvement in Europe, it's hard to see what's going to drive the demand side of that equation higher. So that tends to suggest lower prices. Of course, it's always important to remember that when talking about the price of oil, there's any number of external influences that can impact the price. Middle Eastern crisis or the hurricane season that's about to start here in the U.S. But if we remove those from the equation, we look simply at the fundamentals, supply and demand, I think it's reasonable to expect the prices to continue down at these lower levels.
All right, I'm sure you'll keep us up to date. Thank you, Mike. We appreciate you and U.S. Bank.